we should really get rid of this misconception that investing is for the rich.
Yeah.
You need a lot of money to invest. Anyone and everyone can invest. There is no right age to invest, because some people start later than others. But just know that yes, you might have started late, but you haven't missed the train. The train is forever moving, and it allows everyone to board it.
So yeah, now we're back with another topic, part 2. And I think this is a topic or a conversation that a lot of you guys are going to like, because I have about 6-7 questions here that I got from social media, from a few friends of mine. So don't mind me looking down at my phone. It's just that I'm reading the questions that people that are close to me wanted to basically find out, since they have Obakeng here with us. So yeah, Obi, I think let's jump back to the conversation of investments. So I think the very first question, right, there is a lot of things currently going around. Of course, I'm not sure as to what are the things that you clued up on and what are the things that you're not. But there's things like crypto, there's things like NFTs, there's things like obviously the stock market, and just traditional way of investing, which is buying property. So the one question that I think also I have myself I want to ask you, but also I got this a lot. Is what are the good investments? So what is the real and good investments that people can really look into?
There's a lot. Hey? Yeah. But what I can say is that the biggest investment that you can make is investing in yourself. Think about it.
Yeah.
The biggest investment you can make is the investment that you make with yourself.
Yeah.
And the reason why is that you are your biggest asset. Why? Because as Tebogo, you wake up every day, you want to earn it, you earn an income to provide for yourself, right? So essentially, you are your biggest asset, you are your biggest investment. So that's why people need to actually, pay more mind, with regards to themselves. We need to intentionally grow ourselves, right? But that's just a side note.
Yeah.
So when we're looking at investments, like you say, there's a lot of them, right? There's crypto, there's NFTs, there's property, and so on and so forth. But when we look at history, and when we look at historical data, the one investment that, or the one asset class, because these are different asset classes, right? The one asset class that over time has shown, to grow exponentially over time would be investing in equities, right? So equities would be company stocks, right? If you can think about, the value of, Apple 10 years ago, 20 years ago, compared to now, right? You can see the value of companies such as Tesla. What's the value now compared to 10 years ago? So essentially, the stock market moves up. That's what we say, given enough time. So what happens is that when we're looking at investments, there tends to be a lot of emotions involved, because I always say that investments has to do a lot with EQ, which is your emotional intelligence rather than IQ. Because essentially you have to be able to switch off the emotions when you see everything going bad, right? And be able to know what you invested in. And the reason why I say that is because if we look on social media, there has been a lot of popularity when it comes to financial influencers. Right. I can remember a couple of years ago, there was a easy equities frenzy, right? And everyone was buying easy equities out of the information that we saw online, right? And people were buying stocks because everything was looking good. And essentially, when things started looking bad and the economy started doing bad, people now started withdrawing their funds without understanding that if you're playing in that pool of equity investing, then you have to be playing for the long game, right? So essentially, people were not necessarily clued up or had all the information with regards to what it means to be invested in equities. But equities are the one asset class that we can say exponentially over time has grown, and not also Also looking at, property, appreciates in value. And that's why you have people, who have property portfolios whereby, they buy and sell property, or they buy commercial property and they rent it out, as well as residential property as
Yeah.
well. So you can also look at stuff like gold, which we always say it's a true measure of wealth, right? Because gold is always going to be there and it's always going to appreciate with over time. But I always say that if you're not a seasoned investor, then rather invest in what we call ETFs, which is exchange traded funds. And what exchange traded funds do is that they track a certain asset class, a certain sector, a certain commodity, or a certain index, right? And what it does is that it diversifies your portfolio in the sense that within this ETF, you find that there's different, companies that are invested within this ETF, right? It allows for, the costs associated with starting an ETF. It's not that expensive. The cost associated with it. So if you're a person who doesn't have time to research, what equities, what are good equities, and you don't have time or the money to invest in a property portfolio, then rather look at ETFs because they are affordable, they diversified. So yeah.
Okay. I mean, so now with that being said, I know that a lot of people also have this mindset when it comes to investing. So I think we all know about all the good stuff when it comes to investing. We all, get told the good stories, but are there any, that's also if there is disadvantages to investing?
Well, I wouldn't necessarily call it a disadvantage, but it's something that can happen, right? In the sense that, investments are not guaranteed. They're influenced by a lot of things, whether it's micro or macroeconomic factors that influence the performance of that investment, right? I'll give you an example, COVID 2020, right? If we look at initially when the lockdown happened, what happened with regards to the prices of certain shares, they significantly reduced. But then over time, the market caught steam and started moving up. So essentially, the disadvantage, which I don't necessarily say is a disadvantage, is that you might not receive the expected returns, right? You just should understand what an investment is. You're not guaranteed of high interest rates, but over the long time, if you're investing in a good fund or a good asset class, then you can have the peace of mind knowing that over time you will get good returns.
And then also, let's say I come to you. Obviously, I pick you to be my financial planner. I need that financial advice. How do you then advise me in terms of what would be the best investment to make for me? Because I know that a lot of people, and to your point, you made an example about the easy equities earlier on. We are different people, different ages. We have different goals. And most of us, I think, we all go with whatever is trending. If crypto is a thing, everybody's there. Easy equities was a thing, everybody was there. So how do you then help someone differentiate between what type of investment to make and what investment is good or is the right investment to make for them?
Look, so there's different types of investments which achieve different outcomes, right? If a person wants to invest for the sake of retirement, there's a certain investment product that they can take out for that. If a person wants to invest, to accumulate wealth tax-free, then there's a certain, product for that. If a person wants to, put away money for emergency savings, then there's something for that, right? So you first have to, understand what that certain individual's goal for investing is, because then it will lead you to the proper product that they should be invested in. Right? Is it a retirement annuity? Is it a tax-free savings investment? Is it a unit trust? Is it an endowment? And so on and so forth. So with the goal or knowing why, the reason why the client is investing, you can always know where to put them. And then also, taking into consideration stuff like, the time they have, so the investment horizon, how long do they have to invest for, right? Because that will essentially, give us an indication as to what type of investment fund you need to belong to. Things such as an investor's, risk appetite. Does the investor want to be exposed to a certain amount of risk, right? So then you'd know if you should put the investor in, and fund that is, based heavily on equities, right, which are very risky. Or is the client is conservative or cautious and doesn't want to experience any risk, then you know what type of fund to put them in, right? So that's, the individual's risk appetite and risk profile. And then, so like I said, time horizon, those would be the things that we look at. So it's your time horizon, your risk appetite, your risk profile, what is the goal of the investment, why are you investing for. So then we can typically, know where to place your funds in.
And I mean, this is also a question that I think, if anything, I'm asking on behalf of, a lot of people that are watching. But also it's just a matter of, I just want you to be able to give them, that insight as far as, a lot of people are always concerned about investing and, how old must you be? Is it a young, do you do it when you're young? Do you do it when you feel like you've reached, like you're in your 30s, 40s, where now you're earning a certain amount of income? How do you speak to someone who's basically saying, hey, I'm 19, I want to invest, or someone who's saying, hey, I'm 32, I also want to invest, someone who's saying, hey, I'm 60, I want to invest? Like, how do you assist those people in that, particular different instances rather? What is the recommended age from your perspective?
Look, we always say that the best time to invest was yesterday. And the next best time is today. So meaning that there is no correct age to invest. You can invest for your child when your child is 1, when you're expecting a child, because in order to leverage from the power of compounding. Right, so Albert Einstein, said that compounding interest is the 8th wonder of the world.
True.
And he who knows it, he who understands it, benefits from it, and he who doesn't pays it. Right. So the earlier you can start investing, the better you give your money opportunity to grow in terms of compounding interest. Right. So, and the nice thing about investing is that you don't need a lot of money to start investing, and that's the wrong idea that people have. Right. So now there's companies that allow you to start investing from as little as 20 rand, 50 rand, 10 rand. Which means that anyone can start investing and start benefiting from the power of compounding interest. And I mean, let's look at students, right? Students get pocket money, and sometimes we use our pocket money for things that we can go without, right? So that meal that you bought at the student center that you could have went back to your res and cooked the meal, right? You could have used that 50 rand to put away and earn a bit of interest on that investment. So we should really get rid of this misconception that investing is for the rich. You need a lot of money to invest. Anyone and everyone can invest. There is no right age to invest, because I mean, some people start later than others, but just know that yes, you might have started late, but you haven't missed the train. The train is forever moving, and it allows everyone to board it.
And I mean, just to give a bit of a personal experience in terms of what you just said now, with people can start to save, from varsity. I'll give you that example myself. I had 2 funds, one, I had an education fund, for my now daughter, but obviously I was 19 at the time, she wasn't even born. And then 2, I had just learned about, the tax-free investments and tax-free threshold. I think at the time it was about 30K for a year, but it's still, 500K your lifetime. So I also had that fund set up, since then. So yeah, to his point, there is no time, there is no age. The moment you feel like you have funds that are available and you want to set something aside, choose your priorities, stick to that. I think I'll also just maybe, before we close off, one more question. which I think obviously we spoke about it off air and I know the answer, but I think to the people that are watching, a lot of people are always concerned to say, okay, fine, yes, as much as there's risk to investing, as much as some investments work out, some don't, but on the market, is there such a thing as having an insurance product set up to protect your investment should it ever go south?
So conventionally, there is no product, that can insure your investment, right? Because when people, start investing, they understand the risks that come with, investing. Meaning that, if markets, were to be on a free fall, then you'd lose, the capital amount that you have invested. But there's certain products which have guaranteed interest, and the certain financial service providers will then assume the risk. But then obviously, if they're guaranteeing you a certain percentage of interest, then whatever is above that, then you forfeit, right? So if we're guaranteeing you 8%, then if your investment makes 15%, then you forfeit, the difference between 15 and 8%. So we of that mind that clients understand or have the information, knowing that your investment is not protected and there are risks associated with investing.
Okay. No, I mean, thank you for taking us through the conversation of investments, and I think we can close it off before we jump into the next topic. Just a quick one, guys. I think you guys have heard everything that Obakeng has mentioned. As far as investments, there is no right age, there is no right amount. You can do with any investment as young as possible, with as little as possible. And I just want to say this to every single person who's interested in investing. Remember that there's even a saying, I just forgot who said it or if it's a proverb or what, but it says that people that are enjoying the shade of a tree today because that tree was planted in the past or several years before that. So always think of the future in that sense, that even if you feel like the investment might not necessarily be for you, but you are doing it so that the next person or the next lineage in terms of your generation can be a bit further or set off as opposed to what you were. So yeah, look at it from that perspective. Plant a tree today so that your kids or yourself can enjoy being in the shade tomorrow. Thank you.